Hi guys, and welcome to this week's edition of our weekly forecast. And it's not going to be a long one because most of you guys you already know the current market conditions that we are in terms of directional bias for dollar index, Euro USD, like the major currencies. You see, so this one is not going to be a long one. That's why I had to ask on the group to say uh, which assets do you guys want me to look at. So yeah, forgive me guys because my voice is a bit out of sync. I had a very severe flu the past couple of weeks. That's why you see I wasn't recording that much. My voice was cockeyed. But yeah, be that as it may, it's much better now. So yeah, we might as well haluta continua. So the guys that responded, they asked me to look at Brent, gold, and also UJ. UJ might be a difficult one to really grasp where it is actually going, but we have a look. So we're gonna start with Brent, right? As in, where are we actually heading to in terms of directional bias? So you can see after the high of 2 months ago, the high of just mark it out. Talking of this high here coming in right from September. September's high market has now continued with the downtrend. Now that downtrend has filled up our imbalance that was on the monthly chart. So we traded back to the bearish order block, which is the month of September. We went back to that level during this month, and then price pushed to the downside. If you remember correctly, I did send a chart on the group in regards to where price is likely to go, and I did mention that directional bias here should be easy. The draw on liquidity should be easy. And you can see already November has filled uh, the imbalance which we had on the monthly chart, meaning price has found resistance inside this monthly bearish order block. So where's the target? Where is market going to? So now there's a few things that you need to keep in mind when you're looking at Brent, right? Number one, you need to follow up with the OPEC meeting results or whatever is discussed during those OPEC meetings. So we had one which was scheduled for yesterday, but that didn't happen because of consent that were viewed that were aired between Angola and Nigeria, something to do with their 2024 output. That's why that meeting did not go ahead. So now that meeting has been rescheduled for Thursday. So you need to be well aware of those things happening and what is the end result. What is it that they intend to achieve? So with that in mind, I would expect oil to be more volatile towards the end of the week. In which direction? I would say to the downside. Right. Right now, the draw on liquidity is to the downside. But since market has already achieved its intended repricing model, which was to fill up this fair value gap here, which I've highlighted. See, this candle's high and this candle's low. Price has filled up that gap during the current month, and from there we have seen a protraction phase to the upside, which normally happens. It's the last week of the month, so there's going to be a retracement before another continuation to the downside. So if we are anticipating a further continuation to the downside, where do we think market is gonna trade to? Number two, this level here. We're talking of $70 a barrel. So $70 a barrel is our long-term uh, target on Brent. We also have this level here and the current month low. Right? So the current month low is also going to be the draw on liquidity. So when I say the current month low is going to be the draw on liquidity, how do you target that? Rallies into premium should be your focus. You need to focus on market rallying into premium on lower time frame for you to be a seller. You see, any rallies to the upside that trade into premium, then you can be a seller of Brent crude oil, right? We also have last month low. That's going to be crucial when the current month candle closes, right? We're going to have fair value, right? We're going to have a fair value gap. So this low here coming in at 82,978, right? That low, let me just mark it properly. 82,978, if I'm not mistaken. 82,978. That's the low of October, right? The low of October becomes crucial in terms of where the market is going to trade to. So you might find a retracement to the upside during the month of December before we get another push to the downside. So that's my directional bias on Brent. I'll be favoring more shorting opportunities, right? Any rallies into higher time frame premium areas, then I'll be looking for shorting opportunities. I'm not going to entertain longs at this moment in time because you can see market is in a downtrend, right? We've got market that's in a downtrend, meaning this level here, the $70 a barrel, becomes your long-term target for shorting opportunities. Right now, we're going to see a retracement. The OPEC meeting on Thursday might actually fulfill that retracement of the November candle. Price is going to retrace into premium. Then beginning of uh, December, we're likely to see further retracements into premium before another push to the downside, or maybe a consolidation leading up into 2024. So these levels that I've marked on the monthly chart, those are the ones you need to be well aware of when you're looking at Brent. Now, when we go to the weekly chart, right? To the weekly chart, you can see the past 3 weeks more of like a consolidating market. So basically, market is waiting for that meeting to happen. We're going to have a huge expansion on Thursday or sometime this week before market maybe continues going to the downside. Now, if that is what you are anticipating as a trader, you need to find the draw on liquidity, right? So that's number two. Number one is the old low from October. That level is going to offer you huge potentials of shorting the market. You can see what happened here. Market dropped. Even here, the current last week, market dropped. This week hasn't traded into any direction whatsoever since it's on Monday, right? We haven't tested either last week's high or last week's low. We are going to test one of those levels. If we do trade well above $82, $83 a barrel, then this is where you should be hunting for shorting opportunities, targeting price to trade all the way to $76.60 a barrel. You see? So you're looking for shorting opportunities on Brent. So on the weekly chart, take note of this weekly fair value gap, this weekly imbalance. Right? This weekly imbalance is crucial because there's there's internal range liquidity of buy stops. We've got internal range liquidity of buy stops in this level here. And chances are very high we could really come and fill up that level before we drop to the downside. We also have liquidity previous week's high, right? We've got buy stops above, and then down here we've got liquidity of sell stops. Now we also have, in terms of targets, this imbalance here, right? So if you are shorting from premium, these are your targets, right? You're looking for price to fill up this whole imbalance to the downside. You see, price did not really fill it up. We dropped on the monthly, it's filled, But on the weekly chart, you see we still have a gap right there. So that's your draw on liquidity. That's your target. This internal range liquidity of sell stops. Then to the daily chart, right? On the daily chart now, this is where you're going to be more precise in terms of your shorting levels. That daily bearish order block, this one here, this daily bearish order block is going to provide us with opportunities to short the market, targeting this level here at $76.50 per barrel. So your anticipation should be price trading into this level here. You see this level here become, this candle is a what? Bearish breaker. See, it's got a bearish breaker there. And market is going to find resistance once it trades to these levels. Price will definitely find resistance and offer you the opportunities to short the market to reach these levels here. So these are the levels that you have to anticipate in terms of where you're going to take your shorting opportunities. Of course, things can turn around depending on what the OPEC meeting would have come out with. So this is our H4 bearish order block, right just below the what? The bearish breaker. See, we've got a bearish breaker there, bearish breaker, bearish order block. Price came into that level, found resistance, dropped to the downside. Second time, price came just below the breaker, resistance, drop to the downside. So anticipate the same price action when price comes back into this level here. All right, so if you are shorting, you're gonna have to be targeting 76.60 or 76.50 a barrel. See, that will be your target on Brent crude oil. Right. Then we look at the precious metal, right? So the precious metal has been on a rally. Uh, It has been on a rally for a couple of months now. So we're talking of last 2 months, gold has gone to the upside, mainly facilitated by the conflict that was in the Middle East, which is more or less coming to an end. There seems to be some understanding in their talks there, hostages being released and all that. So yeah, I don't think we're gonna see much of a rally right now in in gold. Yes, we could see further moves to the upside, but they're not gonna be too much, right? So you need to be looking for price to trade into discount for you to be a buyer, right? Discount around the 1950s, the 1980s are going to provide a good opportunity for you to be a buyer on on Brent, on gold, sorry. So looking for long opportunities right now from levels of discount on the weekly, monthly, and daily time frame. So when you look at the monthly chart, right? On the monthly chart, what we actually have is we have price being drawn to the 2080. We're talking of 2080, somewhere around this level here, right? That's our 2080 price point. That's the draw on liquidity. We've got price trading towards that level. This bearish order block has been broken to the upside. You see? So chances are very high that a retracement into discount should push price further to the upside. This now coincides with a weaker dollar. You see, we've got a very strong precious metal right now, and on the opposite side, we've got a weaker dollar index. So this weekly bearish order block here has been broken to the upside. We've got 4 more days to go in the November month. If this candle closes well above $2,000 an ounce, then we've got a breaker. We wait for a retracement back into this order block that has been broken to the upside for price to push up. Yes, we also have a bullish order block here from the month of September, right? But that range is too big. See, the range is too big, but still you have to be in a position to mark it and highlight it and focus on it on lower time frames. You focus on it only on lower time frames when price comes back into those levels. Like what it did this month. You can see the price traded back well below 1935. And from there, it has shoot up for a much, much better reward. So those are the levels you're looking at in terms of where is price on the precious metal. We also have 1916 inside this level here. We've got 1916. Let me just mark out 1916 right there. This level is a very strong level of support if price is above, resistance if price is below. So you need to be in a position to take note of the 1916 per ounce price point when you're talking of lower time frames. So these are the levels you should have on your monthly chart. When you go to the weekly chart now, right? Now those levels you break them down, right? You break them down in terms of where they are in relation to the monthly levels that we have highlighted, right? So we've got our 1960 here, 1916. Then from there we also have 2009. 2009 is quite a strong resistance level. But take note of this zone here. See, that's inside our monthly bullish order block. So you have to be in a position to understand that okay, any retracements into these levels here, gold can move. You see, you can see here 1 and 2 bearish candles. Price did drop to the downside into discount. This candle on its own, many people the following week would have been selling gold. But if you know that it dropped only into discount, then you're looking for buying opportunities. So that's why I was saying you need to be looking for long opportunities on the precious metal when price trades back into discount, right? So any drops, any movement to the downside that trade into your higher time frame discount area, then you need to be looking for buying opportunities. So on the weekly chart, we've got this fair value gap, which I've highlighted. We've got these two relatively equal lows right here. We've got a liquidity pull off, sell stops below that, right? They're relatively equal. So we've got liquidity pull off, sell stops. Then we also have this level here, right? That level, right? That's a fair value gap, right? But you can see this week, the current weekly candle opened with a gap, with a vacuum. Price dropped to fill up the vacuum and then pushed to the upside. So this level becomes crucial in terms of those who want to scalp the precious metal. I won't really recommend. You can scalp when price fills up this gap for a push to the upside. So you can only scalp on the lower time frame. When we go to the daily chart, right? On the daily chart, remember this gap here that I marked here. This down candle will provide support. This down candle here, talking about this candle here, will provide support when price retraces into that level for a target of 2080 per ounce, $2080 per ounce. As you can see, this price action is a bit all over. You see, the levels that are here are not that well formed. See, we also have a fair value gap here. This is for long opportunities. In terms of discount, we've got this down candle here. Yes, it should offer you opportunities. This gap here is now a bit too small, you see. And then from there, we come all the way to the bullish order block. You see, these are levels where when price retraces, you see this drop here. the drop that happened here, we anticipate the same here for a further push to the upside. You see, this drop, this one here, this drop here, it traded back into discount. What discount level? This fair value gap right there. You see. So now we've got this fair value gap here, this one here. We anticipate price to drop into that level for a push to the upside. Right. So I would favor long opportunities on the precious metal, but only when price trades back into discount. So that small fair value gap here, this white shaded area, you can see we've got a bullish order block. Look how price retraced back into that order block, then push to the upside. So I'll be anticipating the same type of price action when price comes back into these levels here. Of course, you're gonna need probably there will be a fundamental heading into the time when price is inside these levels here. Like we've got GDP, right? If we go to our calendar, we've got USDJPY, I think, coming in on Wednesday. See, GDP is for Q3 for the United States, and we also have there's something called PCE, price index, on Thursday. Now remember, PC index, that's like the major fundamental which the Fed look at in terms of measuring inflation. That's their ultimate guide in terms of measuring inflation. So yeah, I'll be looking for long opportunities. I'll be favoring more buying opportunities on the precious metal when price trades back into this count. So you can see there we've got H4 fair value gap. We've got this H4 bullish order block here. These are levels that you should be looking at for price to go to the upside. Then finally we look at UJ. I'm not much of a fan of UJ for the past, I think, 4 or 5 months. I've been expressing that I'm not a fan of UJ. There was just too much interference from BOJ at this moment in time. But I think we are ultimately reaching the ceiling in terms of how high UJ can literally go. We are ultimately reaching the ceiling. So we've got potentially a monthly bearish order block forming right there. And in terms of the draw on liquidity, this next opposing array, which is our monthly bullish order block, will be the draw on liquidity. And we already have relatively two equal lows for the month of November and October, right? Relatively two equal lows, right? They're relatively equal. Yes, the low of November did trade lower, but not by much. Not by much. So I'll be expecting price to be drawn to these levels here and ultimately reach the bullish order block. Only once it reaches that level, then you expect price to find support. But in the coming months, right, or in the coming days or coming weeks, whenever price retraces into this bullish order block, right, it's not yet a bullish order block because November might retrace all the way back up, then it invalidates the bearish order block. Sorry, that's a bearish order block. So we still need November's candle to what? To close. But we can refine that price action by going onto the weekly chart and see if there is any proper PDRA metrics that have been formed there. So remember, from the monthly point of view, we are targeting this bullish order block, right? We've got internal range liquidity of sell stops right here, which will be target for shorting opportunities, right? But on the weekly chart, we've got nothing really in terms of premium area that we can use on the weekly chart. So we need to go to the daily chart. Now on the daily chart, there's more interesting price action now. You see, we now have this fair value gap here, right? Inside our potentially monthly bearish order block. We now have that fair value gap. We also have daily bearish order block, right? Daily bearish order block. So these are two premium levels that you should be anticipating price to trade to before it pushes to the downside. You see these highs here, 1, 2, 3, 4. So that's Monday, Friday, Thursday, and last week Wednesday. Too clean, too clean in terms of price action. I would love to see one candle that trades above them and trade into this fair value gap here for me to start looking for shorting opportunities. So rallies into premium should be your look out for on UJ for you to short, right? You should look out for rallies into premium for you to be a seller. And you can see it's already starting to pan out. Look at here. It's already starting to pan out. Price traded back into this potentially monthly bearish order block and it has dropped. So right now the gray shaded area is our first point of call in terms of looking for shorting opportunities on the precious metal. So we're talking of price levels around I would say 149.80, 149.80. Yeah, maybe too high. So we're talking of 149.75. Yeah, 149.75. Then you start looking for shorting opportunities on the UJ, and your target ultimately you're looking at 147.30 is your initial target, but ultimately you're looking for price to trade into this monthly bullish order block, right? So 149.75 and also the fair value gap on the daily chart, right? Which is this level here. This level here. Expect that level to provide what? Resistance. So that's the level we are talking about. We're looking for price to trade run the liquid pools above 149.75 for a push to the downside. So yeah, that's what I'll be looking at in terms of these three assets. It's assets that I don't usually trade, but once in a while, when a setup presents itself, or when I've done a proper analysis like the one I've done here, then I'll keep my eye on the asset for opportunities in the coming days or weeks. So take note of the levels that I've marked so that you can also be in a position to follow through. Order blocks like these ones here on H4, you see like this one here, right? They will provide opportunities, but only use them when there's actually a fundamental when price is at that level. See? Let's say price is here, right? Towards let me just go to the calendar for tomorrow. So tomorrow is Tuesday. What do we have? CB consumer index, right? Let's say that CB consumer index gets released when price is inside this H4 bearish order block. It's not high probability, but still it is a bearish order block. So that CB consumer index, if it comes out negative and price is at this level here, then you expect price to find resistance for a push to the downside. Negative dollar. So yeah, that's pretty much about it for today, gents. And thanks, guys, for the suggestions that you have made. And I hope you have picked one or two in terms of your technical analysis, in terms of the approach that you need to have on these two commodities and one currency pair that we have looked at. So for gold, Any movement to the downside into discount, I'll be looking for long opportunities. Then for BRENT and the rallies into premium, I'm looking for shorting opportunities. So yeah, that's pretty much about it for today, gentlemen. Yeah, I wish you guys good luck and happy trading during the week. Thank you.